Stephanie Hughes has her eye on some stocks of interest in Toronto. Stephanie, take it away. You're looking at National Bank.
Yeah, that's right, Andy. So National Bank shares were up as much as 6% today. That was the biggest intraday gain since May 2020, and it brought shares to a new all-time high. Now, National Bank reported earnings before the bell today, and its earnings of $2.68 per share came ahead of analyst expectations. Not only that, but this was the fourth quarter in a row where the Montreal-based lender beat expectations there. So this was an across-the-board beat with all business segments coming ahead of profit estimates, especially the capital markets segment. Now that year-over-year growth reached 55%, so some big gains in some of the segments there. National Bank shares have also just been outpacing the peers in general this year with a roughly 25% gain in shares. That's coming ahead of the composite bank's average, and it even beat its largest rival, RBC, as far as share gains go. So months ago, another interesting point of context. Months ago, National Bank said it would acquire Canadian Western Bank, expanding its reach into Western Canada at a time when a lot of other banks are looking south of the border for acquisition targets. CWB shares are also reaching all-time highs today, just rising in tandem with National Bank. So this earnings season has given us a lot to look at. We're in the home stretch, but it's kept us busy there, Andy.
And we already talked to an analyst from ATB about Kinaxis, but investors are apparently discomfited now that the CEO plans to step down.
Yeah, so Kinaxis is a very interesting management story today. Those shares fell nearly 15%. That's the biggest intraday drop since March 2021. And as you pointed out, the enterprise cloud services company's CEO, John Sicard, is planning on retiring by the end of the year. Not only that, but the chief sales officer, Claire Rikluski, is also departing by around November to pursue opportunities outside of the company. Now, the company did reaffirm its outlook, but analysts say that this raises concerns given that there have been challenges with the company's ability to sell large-scale or large supply chain transformation deals in this challenging economic environment. Analysts also said that the changes were unexpected, which are probably surprising traders in a bad way today. But it should be noted that Scotiabank analyst Kevin Krishnaratne said that today's sell-off could be a good buying opportunity in a high-quality supply chain management company. And as you mentioned, Martin Toner, speaking earlier in the program, kind of said the same thing. So maybe there's a silver lining here, Andy.
Fascinating stuff. Thank you very much indeed, Stephanie. National Bank and Royal Bank, both, I was looking at them actually earlier, both those stocks are up about 30% in the past year, and that's about double the gain for the TSX Banking Index. Thank you very much indeed. Stephanie Hughes of Bloomberg.